Welcome back, everybody. Another family meeting here. Nice to see all of you beautiful faces for those of you who have your cameras on. So, this week we're going to be talking about taxes, okay? So, a couple people still popping in. I'm going to pull up my screen and we're going to get into it, right? It's the beginning of the year. Everyone's trying to wait for their W-2s if they haven't got them already. We're going to talk about when you're supposed to get them. And we're also going to be talking about ways to reduce the tax liability, ways you can save money on your actual taxes, and all of the fun stuff that nobody wants to talk about. Taxes is the game in the US, right? Once you figure out how to play that tax game, you figured out the cheat code out of the system. So just give me 1 second here while I pull up my screen and let me know when you can see it. Okay, so family meeting is about to start. We're gonna jump on the Zoom. To all of my TikTok family, if you can make it to the Zoom, click the link in my bio, go to Instagram, click the link in my bio for the actual family meeting. We'll be on today. If you are not able to get to the actual Zoom, click on the link in my bio and sign up for the newsletter. You'll get the alerts as to when we're having the family meeting, what the topics will be, and how you can join. See you guys soon. Have fun. Okay. All right, guys. Oh, wait, is this not working? Okay. Okay. So, family meeting rules, as always, the sole purpose of the family meetings is for this to be a safe space to learn, share, and empower one another around all things that involve financial literacy, right? So if you're looking for some get rich quick plan, this is not the place. This is not it, right? So anything that sounds like that or that's going to be that, you don't need to be here. We're going to give you real tools, real information, and real action plans to actually grow your wealth, right? So make sure you come to all the family meetings prepared with a pen, a notepad to take some notes. For those of you that this may be your first meeting, there is a playlist on YouTube with all of the family meetings. So as we do them, another one gets added, and we're doing them twice a month for the entire year. So technically, this is the second one for 2025. This is a safe space, right? So don't be shy. Ask any questions as they come up. Don't worry about interrupting me. I won't forget. I'll jump right back on track once I do answer your questions. We're going to be talking about finances and money. So let's keep the conversation around family meeting items. Let me move this over here. Okay. The call itself will be about 60 minutes. We sometimes go a little bit over if we get involved in a little bit more conversation, but it's about an hour. The one thing that I ask everyone, because this is a free meeting, share this with friends and family, right? So if you don't do it right now, there is a replay that goes up on YouTube. If you're not already a subscriber to YouTube, subscribe, like, share. That's the way that this thing gets out there to more and more people, to let people know the information if you find value in it. Just a disclaimer, right? This is not financial advice. I'm not a CPA. I'm not a financial advisor. This information is for educational purposes, so I'm giving it to you with the purpose that you learn and earn, right? So the more you know, the better questions you ask, the right questions you ask, and the better decisions you make around your money and growing your money and being financially independent and financially free. So I want to tell you a little bit about myself. My name is Andre Green, also known as Andre Talks Green. I am an investor, a serial entrepreneur, a mentor, and an author. I started in real estate back in 2005. I've had about almost every job there is in real estate. Okay, so there's only a couple of them I haven't done. I haven't done as of yet, and I probably won't be doing them. I found my lane, right? But I've done rentals. I've been a listing agent, a buyer's agent, a mortgage loan officer, a loan underwriter, commercial property manager, residential property manager, and asset manager, and I am still a New York State licensed real estate broker. So I do help some clients buy, sell properties, buy investment properties. I do have a team, so if you're looking to buy property in New York or sell property in New York, you can reach out to me and I will refer you over to the team who will help you get that done. I am also the founder and owner of Seneca Village Insurance. We are a licensed insurance brokerage, licensed in 14 states and counting. We cover life insurance, business insurance, general liability, construction, restaurant, development, and many other lines of insurance. So if the word insurance is in it and you need it, we can definitely assist you with that process. I myself have raised over $350,000 in business credit across several of my business corps. The reason why I point that out is that a lot of people think that knowing how to use money in one place means you don't know how to use it in other places. I've gone through the process, I've done all the things, right? So I've used business capital, started a corp, got it funded, liquidated the cards, and then use it for investments. I'm not telling you anything that I haven't already done or that I'm not willing to show you. The name of my game right now is all about education. I want to show you guys everything that I know, but hopefully you can use it to your advantage as well, because I want to be a resource to you all. So I started investing personally back in 2017. And I started buying single family townhouses out of state. I'm born and raised in New York. I still reside in New York. So all of my investing that I've been doing has been out of state. So if you're looking to invest in a less expensive market, because you may live in one of the more expensive markets, I can also help you with showing you that. That's one of the reasons why we're doing these series. Actually, the next call is going to be on real estate investing and property management. So if you're not on the newsletter list, sign up for the list, because we'll be going over real estate investing on the next call. But I grew my real estate portfolio that I started in 2017 to over 7 figures in under 36 months. So under 3 years is what I grew my portfolio to. Throughout that time, I learned about a lot about real estate, about investing, about property management, about contractors, about tenants. I took all of that information, all of that knowledge, and I actually wrote it down in a book. The name of that book is The Long Distance Millionaire. It's available on Amazon. It's also available on longdistancemillionaire.com. If you go to the website, there's a lot of goodies on there for you, some free items and some combos that you won't get anywhere else. Well, if you want to check it out on the website. So that's just a little bit about me. So for those of you who've seen this already, I like to start here because everyone doesn't start in the same place. And for some of you, this is your first time seeing the family meeting. So I want to give you guys an understanding of where you are to sort of help you get to where you want to go, right? So in these 4 boxes, you should identify with one of them. Everyone's not at the same place, so I'm going to go over them. But one, you just became financially aware, you're working any job right now just to make some money, and you don't really have any plans for your money. You're just kind of living your life. You're working, you're getting paid, you're paying bills. You're on that cycle. You're on the hamster wheel of I get money, I spend money. I get money, I spend money, right? Nothing wrong with that. You just need to know where you are so we know where you're starting the race. Number 2 is you're in your career or you're a solopreneur, which means you're a business owner, but you don't feel like you're really getting ahead, right? Not enough money left over at the end of the month. So you feel like things are tight and you're kind of spinning your wheels. So you're not really thinking about retirement yet because you're just worried about this month or this week into next week, right? No money's really set aside for the future yet, but we're going to get there. That's the reason why we're having these calls. Number 3, money is flowing abundantly and you work to maintain your lifestyle. That means you've got all of the basics covered. You've got some extra money at the end of the month, right? You're feeling good about how much money you're making, but you don't have control over your time, right? So it's one thing to have the money. The next thing is how do you buy your time back, right? So you haven't really started looking down the road yet to figure out what does life look like after I stop working? What's retirement mean for me? Because it doesn't mean the same thing for everybody. So what am I gonna do? The last bucket is number 4, right? You are on the home stretch of your career. Retirement is about the next 10 years or so for you. So you've made a bunch of money. Hopefully you saved a lot of money for retirement, but you're not sure if you have enough money for retirement set aside to live the life you want to live, right? That is the reason why we work. We got to feed ourselves. We got to, have a house to live in. Most of us have families, but we don't want to work forever. So what are we doing to invest our money, to save our money? Because those two things are not the same. We're going to talk about saving for retirement, and we're going to talk about what it means when someone says investing for retirement on the calls as well. But they're not the same thing. You need to save for retirement. You need to have money set aside. You need to have cash flow when you're no longer working. So how is your money working for you when you're asleep, right? You should be making money every single day, even if it's a little bit. Okay. So one of the things that we're going to touch on, and this is the real reason why I started doing the family meetings, and I wanted to make sure that everyone has a chance to get on here, is that we learned about money along the way. I don't care where you are, everyone's learned about money. The question is, how did you learn about money, and what did those lessons teach you, right? So here are a couple of the lessons that you may have learned about money at home, outside of home, and on your journey becoming a young adult or becoming an adult, right? So what are some of the things that we learned about money? I've narrowed it down to three ways. One of them is what our parents tell us about money and how to use money. Sounds like, pay the important bills first, right? Bills like rent, mortgage, pay the light bill, pay the gas bill. If you're a churchgoer, you're gonna tithe that 10%. You want to save 10%, right? And then you're gonna buy things when you need them. That's some of the things that we might have seen in our household, or we learned or heard from our parents, grandparents, aunties, uncles, even cousins, right? Someone's telling you about how to be responsible with your money, hopefully at some point. And the second thing, right, is what we see our parents do. It's not always what they tell us. So what have our parents shown us in terms of how they use money, right? So that might look like we see our parents do what we see our parents do with their money, are our guardians, right? We see them pay bills, we see them pay rent, we see them buying groceries, they're paying for education because some of us went to private school, they're paying for after school, they're paying for, new cars, they're paying for used cars. We've got the holidays that come up. We just finished the holidays, right? So a lot of us have habits that we do around the holidays. Christmas is a big one. Do we see our parents going out to the mad rush starting from Black Friday? Are they throwing things on credit cards? Are they paying with cash? A lot of us don't use cash anymore, but we see them go into the frenzy for Christmas, for birthdays, for special occasions. We're going to the mall. We're spending money in multiple ways, but what we see, we kind of learn through osmosis. The third category of what we were taught about money is nothing, right? A lot of us just didn't get any information. We weren't really paying attention when we were kids to how money was being spent. No one's giving us actual advice or guidance around money. So how do we learn, right? We learn through trial and error, right? So most of us learned all of those hard lessons on our own. So we bumped our head, we stumbled, we might have fell down, and then we had to figure out how to get out of those traps, right? How do we get out of credit card debt? Do we get multiple jobs? Do we find better jobs? What do we do when we're learning by trial and fire to sort of be better with money that we weren't really given any of the tools before? So, I mean, it's sad to say, but true, because I was in this boat as well. I got some really great advice when I first started out making money on my own, and I just ignored it, right? I was being young and dumb because I knew everything. No one could talk to me. I knew the entire world at 16, 17, 18 years old. And for those of us that have people in that age bracket, we know that it's hard to get through to them sometimes, but somewhere deep down, we hope they're listening, right? All right. So I want to talk about the levels of wealth building and financial literacy. This is really important to understand and to know. There's levels to this, as the saying goes, right? So when I'm doing this series of education, I break everything down into levels, and right now we're still in level one, right? So what is in level one? We're going to talk about credit, which is actually on one of the Zooms one of the YouTube videos we already did. We talked about personal credit, right? We're talking about income. We're going to talk about budgeting. I know how many of you love budgeting. Nobody loves budgeting. I'm joking. But we're going to talk about budgeting, adding in the things that you want, the things that you like. Your goals should be inside of your budget. We're going to get to that episode, that lesson soon. We're talking about savings, paying yourself first. That's a really important thing. The reason why I want to touch there for a second is a lot of people don't realize that money is a emotional thing, right? We spend money based on how we feel. We save money based on how we feel. We do things with our money mostly on behavior, right? So the discipline that we're trying to get into is to be less emotional about the money and more intentional about what we're doing with it. Because when we get a hold of our emotions of how we spend money, we don't do retail therapy, you'll have a better understanding and a better grasp of what is your money supposed to be doing, what are you doing, and what's the end result of those things, right? So pay yourself first is the first habit I want everyone to get into. You are the number one thing you need to pay before you pay anything else. And then after that, you get to the rest of the bills and the rest of the investments and everything else. And if you get into that habit, trust me, it will change your life. The last thing on level one is life essentials, right? You got to have somewhere to live. We got to make sure we have some type of insurance. We got to have food on the table. We've got to be okay that we're not stressed and worried about regular life things. Once we get those things in level one under control, we now move on to level two. Inside of level two, we're going to talk about insurance. In that particular time, we're talking about life insurance. We're talking about homeowners insurance for those who own homes. We're talking about renters insurance for those who rent. You should be in one of those three buckets. You should be alive and you should be living somewhere, because insurance is a key asset to protecting yourself, right? Once we're talking about insurance, we then talk about business credit. Business credit is important because once you understand how your personal credit works, business credit is a advanced strategy that's going to give you access to more capital. You're going to figure out how do you get large amounts of credit, large amounts of capital from the banks. What are they looking for? What kind of business should I even have? Because everyone should have a business. And the reason why that's important is because it's about taxes. That's the game that we are playing in the United States. Taxes is the only game in town. Once you figure out how to play the tax game, that means with the IRS, that means with your credit and with your money, then you're going to understand that things start to change quite quickly and quite fast for you, right? So after we talk about business credit, we're going to talk about the money plan. Now that we have access to all this capital and we've taken care of all things in level one, what am I now going to do? What's my strategy to put my money into action to start growing it and accelerating it, right? That rolls you into investing. What type of investor do you want to be? What kind of investments do you want to own? What kind of assets do you want to use to grow your wealth? And the last step in level two is money education. The more money you make, the more money you accumulate, is the more you're going to need to know about the right places to put it, and more importantly, the right questions to ask. Because when you get into money education, you're going to have a lot of a lot of people that you're going to start talking to, because as you amass more assets and more wealth, you're going to need new people to add to your team, right? So we're going to start talking about bookkeepers, we're talking about CPAs, we're talking about attorneys, we're talking about financial advisors. All these people are going to start coming into play when you start learning more and more about money. Then you'll graduate to level three. By the time you get to level three, one and two, you should know very, very well. And what that means is there's not a lot of learning to do. It's time to take massive action. Massive action is where you start to really make a lot of money, because you're going to start to see the snowball effects of all of those little habits that we were doing in level one and in level two by building ourselves up. Now we've got everything, we've got all the ammunition we need. Now it's time to start using it out in the real world, right? So we're going to start buying assets very actively. We're going to be constantly looking to build our portfolio in whichever way, shape, or form it looks like for you, on a very consistent and intentional basis. Now, when you start making a lot of money, now you've got more money to manage, which is what money management is. Because if you get big enough, you're going to have multiple bank accounts, and you're going to be doing a lot of accounting or bookkeeping with whoever you put on your team to do that, right? You have to know where your money is. You have to know how much you have. You have to know how much you have to invest. It's another form of budgeting, but at a higher level. That pushes you down the rabbit hole of tax planning, right? So tax planning is a part of the conversation we're talking about today. We're not going to go too deep on a high level, but we're going to cover the basics, right? Of what taxes, of how do we reduce our tax liability for a W-2 employee and for a business owner, because they're not the same, but they're both very important, right? And then we're going to look at legacy planning and asset protection in level three. Now, asset protection can be done in many different forms. We're talking about trust, we're talking about insurance, life insurance plans, we're talking about moving money around into different holding companies, LLCs, S corps, C corps, all of those good things. And then the legacy plan is how are we passing that money from one generation to the next generation. You don't want to be stuck where you made a bunch of money and you never learned how to push the money to the next generation, right? I got a few people that are in the waiting room, so give me 1 second, guys. Trying to get them in here. All right. Sorry about that, guys. Back to the share. All right. So what are the basics? Make sure I didn't skip a slide here. Nope, I didn't. All right, cool. So what are the basics about taxes, right? If you are making money, you should be filing a tax return annually, okay? Tips that you should know if we're going to talk about for the first slide, we're talking about if you have a W2 job, right? So you're an employee of a company, what are the tax information that you should know? On the last Zoom that we did, we spoke about the W4, right? This is the same place that we're going to start when we start talking about taxes, right? And your tax returns, because the tax returns are being pulled from your W4, you're being taxed based on the information you put on your W4. So if you watched the last call, I'll touch on it real quick. You have the ability as the employee and the person paying taxes to tell your employer how much tax to take out of your paycheck, right? And you're doing that based on your elections on your W4, right? So if you're single zero, that is the election that will give you the highest amount of tax taken out of your paycheck. As you make yourself head of household or you start adding dependents to your W4 elections, that will reduce the amount of taxes that's coming out of your paychecks, which means you're taking home more money in every single paycheck. I want everyone to be aware, and as a word of caution, don't just arbitrarily start saying you have a bunch of dependents, because you're going to get a lot more of your paycheck, but then at the end of the year, you're going to run into a tax problem because you're going to have a huge tax bill when you do your taxes, and you realize, and Uncle Sam realizes that, well, you didn't have all these dependents, so now you kind of owe us the money, and you're going to owe a substantial amount of money that you may not have been planning to save for. So keep in mind, you want to not go crazy with the W4 elections, right? What I like to tell everyone is that if you have a regular W2 and you don't have any other assets, you should know how to fill out a 1040 tax form. That is a very basic tax form. And if for those of you that go to H&R Block and any of those tax companies, they charge you a couple $100 to do that. It's 2025. Everyone has a computer, and TurboTax is one of those great tools that you can use to sort of fill out your information. All you're doing is inputting your basic information that's on the W2 form that you get from your employer. You're putting that in at the beginning of the software, and you're following the prompts and answering the questions. Anyone can fill out a 1040. If you're using a TurboTax type of software, it's quite easy to follow through the process. You're not even fill out any forms or by paper anymore. Everything's on a computer. It will tell you if you skip the section. It will tell you if you miss something. It will tell you a lot of things, and at the end of it, it will tell you what your estimated tax return is. It'll tell you if you're likely or unlikely to get audited. It tells you a lot of stuff. I do not work for TurboTax. They're not sponsoring me. This is not a ad for them. It's just a product that I've used for many, many years to help me do my taxes, to save myself on a bunch of things without going to some of these H&R Blocks type of people. But it helped me to understand the things that I could put into my tax return as a write-off as well when I became a self-employed person and a business owner, right? So everyone who has a W-2, your employer is supposed to get it to you by January 31st, right? So that's a few days away from where we are right now because today's the 28th. So in about 3 more days, you should all have your W-2s if you don't have them already. If you haven't got them, I suggest you reach out to your employer just to remind them. They should know about it, but maybe it got lost in the mail, so you might want to ask for a copy so that you can get ready to file your taxes, right? Everyone should know what the tax deadline is. Tax deadline is April 15th of every year. Unless something unusual happens, like during 2020, they adjusted the dates because it was a wild time and they didn't want to have everyone panicking because we sort of went to shut down right around the same time that April 15th, what the April 15th deadline was. So that got pushed out a little bit. But April 15th is actually the deadline. So
Is April 15th?
April 15th is an important date because what you should know is that April 15th is your deadline if you think you owe taxes. Now, if you do not owe taxes, your deadline is not actually April 15th. That's the date that everyone uses when it comes to taxes and the IRS. But if you do your taxes and you're gonna get a refund, you have 3 years to file your tax return from that April 15th deadline for that particular year. So if you're gonna get a refund, it's not really due April 15th. If you owe money to the IRS, your deadline to get your tax return in is April 15th. That's the differentiation of that date, okay? So the IRS has most of your tax information already from your employer, whether you send in a tax return or not. But they do not do one for you, even though your employer has to fill one out because they don't want a problem with the IRS. So they have to fill out their portion, and on their portion will include payroll and all of the employees and all of their social security numbers. That's how they have all your information. So what they're really doing is they're kind of sort of checking and verifying what you're saying on your tax return along with your employer saying. Plus, if you have any additional income that you may have made or any additional deduction that you may not have received from your job, you now can do it for yourself and file it for yourself. But I want to tell everyone, don't go crazy, right? You can file your tax return, but don't be dumb if you're doing your own tax return, don't be dumb by adding stuff and going crazy, making up things to get a bigger refund. It will come back to bite you in the butt later. You don't want to be in that boat. You don't want to owe the IRS a bunch of money, right? So if you do end up owing the IRS money, right? So let's say, you did your tax return, it shows you owe the IRS a couple $1,000, depending on your situation. If you're a high income earner with no deductions, I'm going to talk to you guys on the next slide. But if you're in that boat where you don't have a lot of deductions to bring down your taxable income, you might owe the IRS a lot of money. Now, if you do owe the IRS a lot of money at any given year and you don't have the money to pay it all at once to the IRS, you need to be upfront with them and clear. Do not go running and hiding from the IRS. It will not help you. Okay? So if you owe a bunch of money to them when you do your tax return, after you get everything filed and they reach back, they'll send you a letter letting you know how much your tax return, how much they have for you that you owe. Excuse me. They're gonna send you a letter to tell you how much is owed. When you get that and you see what it is, if it's something that you can financially manage, you're gonna want to go ahead and start make the payment. If you can't make the payment all at once, you're gonna want to go ahead and set up some type of payment plan or payment arrangement with the IRS. My suggestion to you is that you do that ahead of them asking you. The reason for that is that if you go and reach out to the IRS and you tell them, hey, I know I owe you guys $8,000, to the federal and then $1,000 to the state, but I don't have it right now. I can afford to pay X number of dollars comfortably, right? This is the number that I can afford right now based on my income, based on where things are on my bills. I can afford to do this. If you do that and not wait for the IRS to start taking their own action, they're more likely to work with you to put you on some type of payment and repayment plan. You don't want the IRS to arbitrarily set that number for you because you don't want them to set it for you because it's normally going to be a higher amount that you can't afford. So now it's more of a struggle. It's more of a strain on your income and your mental sanity. You want to have peace while you're working, right? As much as you can have. You don't want them telling you what you got to pay. You want to try and work something out with them. And normally they're pretty amenable to working with you, right? For those of you who do not pay, right? If you don't pay the IRS at all, after an extended period of time of not paying them, the IRS has the ability to do what? They can garnish your paycheck, like go directly to your job, tell your job that you owe the IRS money, and they'll tell your job to send a portion of your check directly to them. You don't want to do that. They also have the ability to freeze your bank accounts. You don't want them to do that. They also will hold money in the future, right? So let's say 2024, you owed a bunch of money to them, you didn't pay them. 2025, you're supposed to get a big tax refund. You're not going to get that refund, or you might get the refund minus whatever money you owed the year before. But on top of that, they're going to charge you penalties and interest. So you don't want to be in a boat where you owe taxes. Now they charge you a penalty for not filing on time. Then they start charging you interest on top of the penalty because you didn't make a payment arrangement and pay back the taxes. This is not where you want to be. So let's be clear about what we can do to keep you out of that boat. Because if it's prevention is much better than cure, right? One more thing I want to touch on when it comes to the W-2 employees is that if you have the ability to contribute to your 401k, you should do so, right? Especially if they're doing a match. If your job is doing a match and your 401k is 3%, 5%, whatever the match is, do the match because you're getting free money from your job. But on top of that, when you put money into a deferred tax plan, it's going to lower your taxable income. So by lowering your taxes, because you're doing the 401k contribution, you're saving for retirement, it actually lowers what you have to pay back to Uncle Sam today. 401ks, IRAs are deferred tax plans, right? So if you're, depending on your job, you might hear 403b, you'll hear 401k, you'll hear of IRAs. Some jobs offer Roth IRAs, Roth 401ks. These are all retirement type of accounts. Deferred ones lower your taxable income right now. The ones that you pay after tax, they don't necessarily give you a break today, but you are saving for the future. So think of it this way. For every $100 that you contribute to your 401k, it's $30 less that you have to give to Uncle Sam, give or take. That's just a percentage based on your tax bracket, but it's a good way to think about it, right? You're putting money away for yourself, and you're also lowering the tax you got to pay right now. We can have another conversation about how your 401k and about how much you get taxed later on down the road, because that's in another Zoom we've already done. But we're talking about taxes and how to get that number down. So for those of us, or for those of you who are self-employed, there are some tax things that you can do which give you a lot more flexibility and freedom than the W-2 people, right? And the reason why I'm bringing this up is because I said it before, everyone should have a business. If you have a W-2 job, you should still have your own side business, right? You don't have to do it necessarily full-time, 40 hours a week, but if you have a hobby or you have things that you want to do part-time, you should set up a business around it. And the reason why I like to harp on that so much is because once you start to understand how the taxes work, you see that having a business is a cheat code to the tax system, because you now get to deduct and write off more things. And I'm going to give you a couple of them here on the call today, right? Because when you're a W-2 employee, how do you pay tax, right? They take the tax before you even get your money. So you go to work for 40 hours for the week, or 50 hours or 60 hours, depending on your job, And the IRS, Social Security, the state, everybody's taking his hands is in your pocket before you even get home to get your paycheck. They're taking the money out before that direct deposit hits. Now, when you're a business owner, self-employed, solopreneur, that's not how the taxes work. When you're the owner of the business, you're going to pay taxes after you've paid yourself, after you've paid the business expenses, and what's left is what you pay taxes on. So you can see there's a huge difference in the structure of how the taxes are paid. The taxes are killing the W-2 person, and it's an afterthought for the self-employed person or for the business owner, right? We should all be business owners, right? So now, once you understand now your taxes and your tax bracket is determined by what level you're on, right? So I will be sending out a checklist and a newsletter tomorrow, most likely. So if you're not on the newsletter, join the newsletter because I'm going to give you some of the tax brackets to show you how much tax you're paying per bracket, and it's a sliding scale. So the lower you are on that, and as a business owner, you want to have the least amount of taxable income as possible. So you're having a lot of expenses because hopefully you're reinvesting back into your business. That will help you to grow your business and also make more money and lower your taxes. That one thing does multiple things for you. So it's like a great lever you can use on your business, right? So as a business owner, you should be running as much of your expenses as possible through your business, right? Because we're talking about how we're lowering our taxable income. So for most of us, I think everyone on this call has a cell phone, right? If you are a business owner and you use your phone for business, some of that phone bill now can be a tax deduction, right? These are the easy stuff that everyone thinks about. If you have an office in your home like I do, the portion of this portion of my home is a tax deduction, right? You can also use it if you're paying rent. A portion of your rent can be a tax deduction if you're doing your books and your bookkeeping properly, right? It's all about showing the actual need and necessity in your business to the IRS, right? Because you want to make sure you're not just making up random things. You want to have receipts. You want to have receipts for the things that you're doing, for the things that you're going to show them, for the things you're going to write off, right? So cell phone's an easy one. Where you work is another one, right? Some of us are going out for meetings and meals with clients. Those are tax deductions. You want to do things with your business, and if you're paying attention to the levels, on level 2, we talked about business credit. Business credit is a place where, because you're a business owner, you would have established a credit card because you went to one of the banks that you use to open an account. That's the card you should be using for your business, right? You don't want to commingle. You want to be very disciplined with how you're spending your money. Right. You want to use the things for your business that you can, and then for the things that are not necessarily business expenses, you're going to use your personal credit card and your personal accounts. But the more things that you can get into your business that you can make a business deduction, like a meeting with a friend or someone you're trying to recruit or a business partner, those things are now taxable deductions for you inside of your business. So we're talking about food, we're talking about cell phones, we're talking about our home or our place that we rent, the car, gas, transportation, all of these things that you're doing to get to and from for your business, they all come back into play for your actual deductions later on at the end of the year. So keeping good books is very important. You want to have a spreadsheet. I'll send out on the newsletter one of the spreadsheets that I use to sort of track my business income and my business expenses, because the more daily and weekly habits you have of tracking your information, it's a lot easier at the end of the year to go ahead and sort of review versus trying to remember, right? So you do it every day, once a week, once every 2 weeks. If you get to once a month, that might be kind of a lot depending on how much business, how busy you are. But you want to be good with your record keeping, because it's going to save you a lot of time and a lot of headache later on at the end of the year when it's time to get all your tax documents together, right? So as I said before, you're paying taxes on what's left, right? So you make money in your business, you pay your business expenses, which includes payroll, which includes the credit card, the cell phones, the gas, all of those things, and then at the end of your balance sheet is what you actually pay taxes on. So that's what's left, right? That's the huge difference between a W-2 person and a business owner. And what did I say before? Everyone should be a business owner in some way, shape, or form, because opening up a business gives you a lot more options and flexibility when it comes to lowering your taxable income, taking deductions, writing off more things, spending less money to Uncle Sam, and keeping more money in your pocket. The IRS tax code is literally a blueprint of how to reduce the amount of money you give to the IRS. Now, nobody in their right mind is reading thousands of pages on the tax code. So find a very good accountant or CPA. I am not one, so I can't help you with that. But having a good tax person in your corner who is not always trying to be conservative is what you're looking for. I'm going to send you a couple of questions to ask anyone you're interviewing to be your accountant, right? Because you're the CEO of your life. So you need to make sure you're hiring the right people to be a steward of your money just as good or better than you are, right? So make sure you're asking the right questions. So after we've made a bunch of money in our business, I'm so happy for everyone. Everyone's got millions of dollars to put away. Where are we going to put it, right? Retirement is a big piece for everyone, not only W-2 people. So if you don't have a job and you're solely self-employed or running a business, you also have to think about, well, how long do I want to run this business for? How long am I going to be going for? Because you don't want to work forever. I understand you might enjoy and love what you're doing, but at some point you're going to want to retire. You're going to want to step away from the business, and hopefully you have the proper infrastructure, you have the proper systems in place to run your business so your business can run without you doing all of the work. Because if you are a business owner, and I'm going to say this with love and care, if you're a business owner who has to do everything in their business, you don't have a business. You are a glorified job owner. That's it, right? I know we escape the W-2 to 9 to 5 to say that we have a business, but if you're working 70, 80, 90 hours a week, and if you don't get out of bed, nothing gets done for your business, that's not a business. You bought yourself a job and you're gonna work really hard and probably burn yourself out because you don't have the things set up in place. So keep that in mind. But back to the retirement accounts for the business owners, right? So as a business owner, you can contribute to a SEP, which is a self-employment pension plan. You can contribute to an IRA, and individual retirement accounts. We talked about these accounts on the other family meetings, so those are already up on the YouTube channel. So the IRA is individual retirement account. They have regular IRAs and Roth IRAs. You should know what the answers to those are by now. And if you don't, a Roth IRA is money you put into an account after you pay tax. And a regular IRA is tax deferred. And all that means for you is that if you have a regular IRA or a regular 401k or a regular 403b, you put the money in now, you pay tax on it in 20, 30 years. Some people have mixed feelings about that because we know that our government right now has a lot of debt. And the only way to pay off a lot of debt is to increase taxes. And normally it hurts the working person first. So if you can afford to put your money into a retirement account after the tax, right, into a Roth account, and that money is going to grow tax free, you're normally going to be in a better situation than if you put the money in tax deferred. My only caveat to that is if your job is already matching with your 401k contribution or retirement contribution, take the match because that is free money. Anything above that amount, I wouldn't necessarily be throwing into my 401k. I might be looking at some alternatives like some Roths. I might be looking at a self-directed IRA that allows the owner, so you don't have to only be a business owner to have a self-directed IRA. You can be a W-2 employee and have a self-directed IRA. A self-directed IRA is another account that you set up outside of your regular 401k that you control. So you get to tell the account what type of investments you want to make with that money. So it's a company that's set up to do these things for you. All you do is send them your money. They have the account set up for you, and you can dictate to them where you're going to actually invest your money. Okay, so Self-directed IRAs is a great way to sort of take control of your retirement, especially for my business owners and self-employed people. Roth or any retirement account that allows you to grow your money tax free because you put the money in after tax is, in my opinion, the better way to do it versus tax deferred if you can afford to do so. Okay, so SEPs, IRAs, self-directed IRAs, and the other accounts that I mentioned in the other Zoom are all accounts that self-employed people, business owners can use, and everyone should be saving money for your retirement at some point. Okay, don't wait. The earlier you do it, the less you need to put in, the more money you will actually have down the road, because time is your friend when it comes to investments. The longer time horizon you have, the more you'll get ahead, the more you'll have, and the more you're able to absorb the ups and downs, because a lot of our retirement accounts are in the stock market. And if you are one of those people who was looking to retire in 2008, you might have had a few issues because the stock market lost like 40% overnight for many, many people. So I'm a firm believer in having control over your money is more important than how much money you have in retirement. It's important to have money, but it's more important to have control because you get to dictate where that money is going. All right. So just a couple things that I want to touch on in terms of just general information. I touched on a few of them before already in regards to just general information about the IRS and what you need to know. Anyone who is a W-2 employee, you should know that you're going to receive your W-2s by January 31st. Everyone is supposed to, all the companies are supposed to send them out to you by that time. And the deadline to file your taxes, if you're going to owe, is April 15th, right? So if you don't think you're going to owe, or you did a preliminary tax return and it's showing that you don't owe, April 15th is not your deadline. You actually have 3 years to file your taxes. If you haven't done so already, you still have time to claim your refund. If you go past 3 years of not filing your tax return and you were supposed to get a refund, the IRS does not have to issue you that refund anymore. So if you got a 3-year window, if they owed you money, to collect it from them. After that window, you normally do not receive the refund, even though you were supposed to get it. You actually just forfeit that money and you give the IRS free money. Okay. Everyone should file a tax return at some point, right? So you want to stay on top of your paperwork just to not have any issue with the IRS. If you end up owing money to the government, work out a payment plan with them, but be proactive about it. Don't wait for them to start harassing you. Go to them and tell them, hey, this is what I can afford. They are normally more happy to work out a payment plan that way versus them chasing you down and trying to figure out how much money they're gonna take from you. And if they don't get a hold of you, then they start to go and garnish your wages if you're working, or they'll freeze your bank accounts, or they'll take future tax refunds from you because you actually never paid your taxes. It's really important that we understand that as business owners and W-2 employees that we create a team, right? Having the right team is the reason why I'm doing this webinar series and these calls, right? I want to make sure that everybody's aware of the right people to have on your side and the right questions to ask those people. Okay, so who should be on your team when we're talking about taxes? First person is going to be a bookkeeper, right? So for most of us, if you don't have a lot of if you're not running a business and it's just you're just working, then you will most likely be your bookkeeper to start out, right? And as your business grows, or as your assets, as your income grows, you might want to bring in someone else that has a little bit more knowledge than you to keep track of things, because you get busy, you get caught up in everyday life, and you just don't have time to keep track of everything. So having a bookkeeper, or you being a bookkeeper, is your first layer of the first team member that's going to be on the team. Once you get past that, you're going to have a CPA or a tax preparer, right? Because most people do not do their own taxes. And the more involved, the more assets you accumulate, the more deductions you have, you then want to get a qualified CPA. So a CPA is normally on the personal side. some businesses have CPAs. For a business, inside of a business, you're going to talk about a CFO, Chief Financial Officer. So CFOs should be inside of your business once your business reaches a certain size. For this conversation, I'm talking about any of the business owners that have a business that's doing $1 million a year or more. You should have a CEO. Excuse me. You should have a CEO, if not on staff, on payroll, a fractional CEO. And a fractional CEO is someone that you pay part-time to come in and review your books on a monthly or quarterly basis, just to sort of keep you in line and let you know where things are. So bookkeepers first, then you're gonna get a CPO, a CPA, or a CFO, depending on we were talking about a business or you personally. The next team member you want to make sure you have is a tax strategist. Now, a tax strategist is not someone that just does your tax return. You're looking for someone who is going to be proactive and it can tell you the things that you can and cannot write off, right? A regular tax preparer is someone that works at, H&R Block or Jackson Hewitt. They're just taking the information you give them and plugging it into a software. A tax strategist is a person that you should be able to contact throughout the year. Hey, I'm thinking about buying this, or I'm thinking about spending money in this, or I'm thinking about investing in this. They should be able to help you strategize throughout the year what things you can do to reduce your tax liability, to not necessarily get you in trouble, to be proactive about how you're managing and using your money throughout the year so that at the end of the year, you're not paying too much to Uncle Sam and you utilize all of the tools inside of the IRS tax code to play the game, right? Because like I said, the tax game is the really only game in town when it comes to you making more money and keeping more of your money. Because we pay tax on everything. You pay tax on your income, you pay tax on your food, you pay tax on things you buy, you pay tax on your property, you pay tax on the interest you make at the bank, you pay tax on. You pay tax on everything. So we're killed with taxes. So the more we learn that we need to recoup that money and how to reduce what we pay in tax is the better off we'll be. That's why the last person that most people get to is a tax attorney. So this goes for personal and for business. Depending on how much your net worth is will determine when you need to engage a tax attorney. If you're running a business and you're making over $1 million, you should definitely be at least consulting with a tax attorney because you want to make sure you have the proper structures in place. C Corp versus S Corp versus LLC, how the LLC is actually taxed is very important. They're not all taxed the same way because you get to actually pick the election of your tax. LLC is just a name for the designation. The type of tax is C or S Corp, right? You want to have a tax attorney on your team because you're going to need like the tax strategist to bounce ideas off of them. But the tax attorney, you want to kind of do some of those things on the front end. You don't want to sort of set things up, run it for 8-9 months, and then like, oh wait, maybe I should go talk to somebody now. You might be working backwards. So don't hustle backwards, get ahead of the game and figure out what things should I be doing first to get the business set up properly so you have the proper foundation to then go forward, right? And one of my favorite African proverbs says, if you want to go quickly, go alone. If you want to go far, go together. What that means is having the right team will get you much further in life, in business, in your journey than if you just did it on your own. Yes, you can figure it out, but using other people's experience, like myself, like finding a good financial advisor, a good tax strategist, a good CPA, even a good bookkeeper will tell you things that you just didn't know. So the more people that are in your circle, that are in your network that you're using, and yes, some of these people are paid. You have to pay them for their services, but you're paying them for their services because of the value that they add to your life and to your business. So my goal and with the family meeting series and the webinars is to teach you how to ask the right questions so that you're educating yourself. Because in my experience of my journey so far in life and in business is that you meet a lot of people, you have a lot of conversations, but if you're not asking the right questions to the right person, you either hurt yourself or you slow yourself down, right? So you want to make sure that you build a team. You have to build a team to get you to where you want to go in life because you're not going to get there alone. Someone asked a question in the chat, and is April 15th the same deadline for corps as well? Great question, Kate. No, So for businesses, the actual tax deadline is actually the third quarter. It's in October, if I'm not mistaken. It's in October. So if you're doing your personal tax return, that's the W-2 conversation, April 15th. For business owners, it's October, but that's only if you file an extension in March. So if you own a business and you're not ready, because most of us running a business, we're still playing catch up because we haven't done everything we need to do to close out our year. You have to file an extension for your business in March, and then the deadline after you file the extension is actually in October. So make sure that if you're not ready to file your taxes by March for the business owners, you file the extension, you get all your documents together. If you have a W-2 job and you have a business, you got to either do everything really early or you'll file the extension to then get it done later on in the year. From my experience and what I've seen, a lot of people who do open a business, who take my advice, who follow the game plan, they end up either not owing anything at all, or they owe a very small minimal amount that even when you do the extension and you miss the April 15th deadline, you're not really worried too much about how much you're going to pay back to the IRS because you've got a lot of deductions and write-offs for yourself. Okay. So great question, Kate. Thank you for that. I actually forgot to put that in there. But yeah, it's 2 different dates for business and personal. So that's pretty much it for today in terms of what I wanted to talk about in regards to taxes. If anyone has any additional questions, thank you, Arlene, for the comment. I'm glad you like the team idea, because the team is what's gonna help you go further and grow more. But if you guys have any questions about taxes, business or personal, like I said, I'm not a CPA, but I know a lot about it, so I can definitely answer them for you now. You can just unmute yourself and ask the question. But a couple of future topics for the family meeting will be how to invest in real estate. The next meeting, which will be February 11th, if I'm not mistaken, we will be talking about real estate investing. So if you're interested in getting started in real estate, if you're interested in learning about property management, that's what that call is going to be about. For those of you that are in New York or want to come to New York, I will be hosting or will be featured on a podcast on February 1st at 12 p.m. in Brooklyn. That podcast is strictly to talk about real estate investing and how I use alternative methods to start investing back in 2017 when I got started, right? So I'll be doing an in-person book signing, and I'll be doing a live podcast to tell people how you can get started investing in real estate, how you can manage property, how you can grow your cash flow, how you can retire from your 9 to 5, how you can quit the day job, right? These are all the things that I've done since investing on my own, right? So that's what's going to be covered on February 1st of that podcast. I'll drop the link in the chat in a second, and that's going to be the next family meeting call is going to be on real estate investing. So if you're interested in that, please come back and share it with your friends and family. A couple other topics that we will be covering throughout the series is, what type of insurance should I have? We're talking about life insurance and other insurances. Am I ready to buy a house now? Some of you have not purchased a home yet, your primary home or an investment. So we're gonna discuss when are you ready to do so? Where should your credit be? How much money should you have set aside? Should you go through any programs like any programs to actually get approved for buying a home, right? Because there's a lot of grants and free money out there, where there was in the previous administration. We'll see what happens with the new one. Should I open an LLC or should I buy one? We're talking about shelf corps in that conversation. We're gonna talk about saving money for the kids for the future, right? 529s, savings plans, insurance plans for the kids. There's different ways to do that when you're talking about saving money for your kids for the future. For those of you who want to learn about passive investing. Now, everybody says that real estate is passive, and for those of you that have actually done it, real estate is not a passive investment. I have a webinar series that I will be doing on strictly passive, like legit real passive investing, where the only thing you need to put into something is upfront. So you're going to put in some money and you're going to put in some knowledge to understand what you're investing in. The rest of it will be on the back end and the money will be working for you. So we're not talking about running a business. We're not talking about property management. We're not talking about real estate investing where you have to kind of actively manage it. We're talking about true passive investments. Some of them involve stock investing. Some of them involve investing into businesses. Some of them involve investing into syndications. We're going to cover the real passive investments and what they look like. Okay. I touched on this already. How much you should be putting into your 401k. Another topic that is very near and dear to my heart, and a lot of you, if you're fortunate to still have your parents, are your parents going to be able to retire comfortably? We will be covering that on another one of our calls, because we are one of the first generations that we're in the middle. We're sandwiched in between a generation that's aging and retiring and a generation behind us that we're putting into either going into college, in college, coming out of college. And we sort of have to navigate the space of we're getting kids and family ready to be out on their own. We have to get ready to plan for our retirement future. And we have family that is actually retiring and what that looks like for them. And how does their life now affect our lives? Because when you start talking about retired parents, we're talking about how much income do they have or cash flow do they have every month? Can they live on their own, physically and financially? Will you be supporting them as well? Are you supporting kids while supporting your parents? Where are they living? Are they on their own? Are they at your house? Are they in a retirement community? We want to talk about medical benefits, because as you age, you tend to have more medical issues. Do they qualify for the some of the government subsidies? Will that be there for them? All of those things are really important when it comes to the family planning part of your parents retiring comfortably. And PMI is one of the mortgage acronyms, which is private mortgage insurance. We're going to touch on a lot of the acronyms when it comes to investing and just across the board and just the financial literacy and so many other topics that I will get into in the future. So if you need any help with any of the topics that I just discussed or any of the ones I've already gone over, you can go to andretalksgreen.com to book a consultation. I do not charge for the family meeting series. This is a free service that I do to educate my community. Some of the services I can offer, some of the services I have to refer out. But my goal is to give you all of the tools and information so that you are as well equipped and knowledgeable as possible when you start out in a new area that you're not really familiar with. So you can book a call with me. It's a free consultation, about 15 minutes, and go to the website, just click on booking, and you can do that there. I'll drop that in here in a second as well. The next family meeting will be on February 11th at 7 p.m. Okay? We're going to be talking about real estate investing and property management. Real estate investing is what got me out of the rat race. It is what I have a lot of experience in because I've been doing it for so long. So we're going to be covering all of the topics when it comes to real estate investing: wholesaling, retail, Airbnbs, buy and holds, fix and flips, commercial, all of it. So we're going to talk about the basics of getting into it, and we'll touch on a little bit more of how we're going to get capital, how are we getting that money for our initial investments, and how are we managing our portfolio or our real estate to make sure that we're making money, because that's the part that people don't realize. You lose money in real estate on property management. It's not always what you buy, it's how you're managing the thing after you bought it. So thank you guys so much for joining the meeting today. I know we didn't have a lot of questions because taxes are not that much of an exciting topic, but I want to appreciate all of the love and time that you guys have spent with me. We will be the generation of change for our families. I truly believe that. I hope that this information is helpful. I hope that you find value in it. And if you do, share it, like it, and send it out to more people so that the more people that know about the family meeting series, the more people will learn from the family meeting series, and the more people we can help and build up our communities together. If anyone's looking to connect with me, here goes all of my socials. Instagram is at Andre_talksgreen. My YouTube, please go to YouTube and subscribe, because if the more people that subscribe, the more you share, the more people get to see it, right? You guys know we're all living in the matrix of the algorithm. So let's get the information out there. On TikTok, it's still Andre_talks_green. I'm also on LinkedIn with anyone that wants to connect. So I hope you guys had a great hour and some change with me today. We kept it pretty much on time today. So if there are any questions, please feel free to ask them now. If not, I will see you guys at the next family meeting.